Hello friends, this is Raj Sastry from Raj Option Trading. Today is March 15, 2022. Let's take a look at the market. Market is still very tough right now. We got Russia-Ukraine tension going on, and Fed is going to raise the rates tomorrow. And we have to watch out for the Fed language. If they use some tough language saying they're going to increase the rates aggressively, market is going to come down. So there may be a small relief rally tomorrow, but market is still tough right now. So best way to invest in this tough market is to learn from the master Warren Buffett. And let's look at the stocks which Warren Buffett might buy. So these stocks have got 10-year track record of generally increasing earnings per share, no negative earnings years. Long-term debt is not more than 5 times annual earnings. That's very sound financially, and average return on equity for past 10 years is at least 15%. These are fiscally responsible, effective management style, and average return on invested capital for 10 years is at least 12%. So in a nutshell, these are very conservative stocks, and they also did very well. So these are the types of stocks I would buy when the market is very tough and turbulent. So with that, let's look at these stocks here and see if we can buy some of these stocks and hold it for a while. So let's jump in. So first, let's look at a quick market update. Look, we got the market here. From a market perspective, look, we are in the extreme fear zone right now. We are in 19, and a week ago it was 13. So right now we are doing a little bit better, but still we are in the extreme fear zone. So the moment we are in the extreme fear zone for a while, for a week or so, that's when market is baking in all this negative news. Even though it's down right now, there is a very good chance it can bounce off nicely from these levels. So when the market is down so low, all the weak links or the relatively weak links will be selling off, and the smart money will get in, and that's when the stock will slowly start going higher. So with that, let's jump in and look at top ETFs by volume. From an ETF perspective, look what's going on here. Top of the list, we got here FXI. So FXI, as you can see here, it's a China-based large cap ETF. Look, there is a very big volume here. There is some fear about Chinese companies getting delisted. That's why finally folks are throwing the towel and selling some of the Chinese stocks. Look what's going on here. Chinese stocks are down for at least in a 10-year period, as you can see here. That's a big bloodbath. Just in 1 year, it's down 44%. And even now, there is a lot of fear about Chinese stocks. That's what's going on here. I would not recommend buying the Chinese ETF unless you're a contrarian and you know what you're doing. And then we got SPY, S&P 500, as many of you know here. Look, S&P 500, very good volume here, 103 million shares traded. And look, we are up today, and still we're in the correction zone, as you can see here, 11% down. So if you're a conservative person and you don't want to invest in stocks, I say go buy some SPY, especially on the down days. Not today, but on the down days. Look, it's down. It's a correction, 11% down in 1 year from 1 year high. That's a correction territory here. And look at the RSI here. RSI tells you SPY is completely sold off here. That's why it's a good one to buy at these levels. If you're an option person, you could sell some put option way underneath here below stock price and make some good premium, given IV percentile is relatively high. And also I love QQQ at these levels here. QQQ also sold off here. You could buy QQQ also on a down day here, but today it's up nicely. I would not recommend buying when it's up nicely like this. And we got a few more, as you can see here. Energy is down off late. This should help with the inflation. As the energy prices come down a little bit, it can help with the inflation. So Fed might take a second look and look at their language. And financials are also going higher, as you can see here, did nicely here. Still financials are sold off with relatively low RSI of 42, as you can see here. And we got a few more. Gold is also going slightly higher, when the market goes up nicely, gold is cooling off slightly, which is expected here. And I would also buy other great names here. I don't have it in the list here. I would also buy XLV as an example. SMH is a good one to slowly buy, and even XLK, which is technology. They will all work here. All right, so with that, let's jump in here. Look at what stocks Warren Buffett might buy, which are very, very, very conservative, and they've done great. So as you can see here, I got list of names here. Look, all these stocks are have done nicely here. Look at the sales. All these companies have got nice sales, and many of them got nice gross margin and net margin. All these companies you see here, they are making money. They're not money losers. Typically, Warren Buffett always looks at money making companies, as you can see here. And look, they got quarterly sales here increasing. It's up nicely here, and also gross margin up nicely. Many of these satisfy rule of 40, where we got quarter over quarter sales growth plus gross margin more than 40%. That's the rule of 40 here. And look, all these companies have got a nice 5-year return here. They've done great in the last 5 years. And typically that tells you, these companies can do very well for next 5 to 10 years without any issue. And look, from a debt to equity ratio and quick ratio perspective, these some of the companies have got a little bit higher debt but completely manageable. So that's why some of these are great companies to invest in. And look, off late, these stocks are down slightly, indicated by RSI or relative strength index. Look at the relative strength index here. Many of these companies have got low RSI, but one or two have got little higher ones like FNF here 53, but still it's not anywhere near over bought territory here. That's why these are great stocks here. Look, they got nice free cash flow. Altman Z score of many of these companies is great here. I like the ones where it's above 2. I think we got 2 here with a little bit negative. You can skip those 2 here. One is AMP, and we got one more here, which is right here DFS, which is a good company. I like DFS, but all the other stocks have got nice Altman Z score. And look, from a industry perspective, all these companies are doing nicely against the industry. These are the leaders doing better than the industry. And Piotrowski F score, which tells you if the companies are doing great from a book perspective. All I got nice Piotrowski F score. I like the higher the better. And we got some, as you can see at the top here, Apple, Accenture, Applied Material. All I got great Piotrowski F score. I would take advantage of this sell-off here and buy these quality companies, which Warren Buffett would have bought himself. And we got a few more, as you can see here. We got one more here, Dick's Sporting Goods. It's got a high short ratio, as you can see here, but a nice Piotrowski F score. It's also doing nicely against the industry here. And we got one more with perfect Piotrowski F score, Cognizant Technologies here. 9 out of 9 score here, great one here. If this comes down, you could buy this one also. It's also a great one here. And I got a few more, as you can see here. I love companies like Estee Lauder. It's a great company. You could buy this company here. It's beaten down, as you can see here. Very low RSI. They're into all this, the beauty products. It's a great company. And then you got EPAM. Many of you know this. It's a great company. Has done consistently well, in many years. Right now, stock came down after the geopolitical tension in Ukraine and Russia, because this company has got exposure to Ukraine, Russia, and Eastern Europe. So I would be buying this stock here. It recovered nicely from its lows here, but it's a great stock to buy at these levels here. And with that, let's jump in and look at a few more. All right, so it's a continuation, as you can see here. Look, all these companies have got nice sales, as you see here. Look, a nice sales number here, and many of them got quarter over quarter sales growth, as you see here, with the exception of few here with Magna, where we got a negative quarter over quarter sales growth, and we got Northrop, which is a defense contractor. I love this company. It also has a negative quarter over quarter sales growth, but still great companies. And look, all these companies have got made money, net margin positive. These are profitable companies, not losing money. And look, from a debt to equity ratio perspective and quick ratio perspective, many of them are doing well. But generally, these are inspired by Buffett. Even though you see a little bit higher debt to equity ratio, these companies can easily manage the debt levels. And look, all the companies with the exception of one here, which is Netflix, all of them have got positive cash flow here. That's a great sign here. And if you compare it with the industry, all these stocks are doing great here compared to industry. So I would be a buyer of these names here, given they're dropped off nicely. And look, from an RSI perspective, if you're like me, I would go with the lower RSI candidate at these levels. Probably I would pass up on stocks like Hershey here, given RSI is 58. I would also pass up on stocks like MATX here, Matson with a little bit higher RSI. I would go with the RSI below 45 or so. That way I don't want to buy stocks which are going high. Look, we got few names here with the nice and high RSI like Regeneron here. I would wait for a little bit pull back and buy. Even though it's got a great benchmark against the industry, it's one of the exceptional stocks doing very, very, very well. But RSI high means you can wait for a pullback here and buy it on a pullback here. And we got a few more names which is completely sold off here. As you see here, we got ITW, Illinois Toolwork. It's a great stock here. It's sold off at RSI 40. You could buy that one here and go from there. We got a few more with the low RSI here. Both Nike as well as Netflix, they work here out of favor at this current time here. But if you have a longer term horizon, you could buy some of these names here. I also like Lam Research here. Look, both Lam Research and KLA Tencor or KLAC, both have got lower RSI. You could buy them at these levels and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.